I've been trading smart money concept for over 3 years now, and let me be real with you. This strategy is not a cheat code, but it is the closest thing I've found to understanding how the market actually move. Before SMC, I was doing what most retail traders do. I was chasing setups, drawing trend lines, relying on indicators, thinking that was the way. I did catch a few wins, then I gave it all back to the market. Everything changed when I stopped trying to follow the market and started understanding what's really moving it. Liquidity, manipulation, inducement, order blocks. This is the language of smart money. And once I started seeing the charts through that lens, the confusion stopped, the market became clear and intentional. This is not some recycled retail strategy. It's a mindset shift. It's precision, it's patience, it's structure. And today, I will be teaching you I'll be teaching you step by step, not just theory, but how I actually apply SMC in my own trading every week. So whether you are still struggling with consistency or you are just tired of being on the wrong side of the move, stick around, because once you understand how smart money play this game, you will never look at a chart the same way. I will also be using a backtesting software to backtest this strategy so you see how it works in real market condition. Make sure you watch the video to the end, like, share, and subscribe to our channel if you are new to the channel. Let's dive into it.
As SMC. SMC meaning smart money concepts. I really don't like this name, but that's the name, everybody knows it as smart money concepts. Okay, that's the name of that strategy, popular name, and it is based on market structure. We make trades based on market structure. We make trades based on market structure. One, market structure, make trades based on liquidity. These are the concepts we use. Then we use supply and demand zones. And we use order blocks. That's the basic things we use for this strategy. So we'll take all this one after the other. I'll try as much as I can to make them very concise and brief, because I wouldn't want to be dragging it. I don't like learning process. I believe should not be too long. If it's too long, it gets boring. So I'll try as much as I can to make it concise and short, not too long and focused. Okay. So now we'll talk about market structure from
This OB? What's this OB? OB.
Sorry, let me. Order blocks.
Order what?
You get it now?
Is that the order you intend to use?
Just calm down. I'll explain it. Just calm down. I'll explain it. It's just a name. It's nothing. It's just the popular name that they call it. But let's just spend it. We'll get there. Let's take it from market structure. Okay? Are you hearing me? Now, when we talk about market structure.
Yes, I can hear you.
Market structure is all about trends, just for you to know the trend, so that you'll be able to know whether you are going up or you are going down, just like what we use moving averages for in our previous series of classes. Okay, now here we use another concept. We use concept of market structure to be able to know the trend we are in and to be able to know whether we are buying or selling, that we have been looking for buy or looking for sell. In the previous class, we know that, okay, when we have a cross upside, the lower one is cross above, we know that, okay, price is expected to start going to the upside and we'll be taking more buys than sells. The same thing is we also use market structure to know where market price is leaning towards, where we want to be taking more trades towards. It will tell us whether we should be taking more buys or taking more sells. So how do we do this? Now, if you remember, if you change to line charts, for example, let's say we change to line charts and you come to see, you see that you see the way the price is moving, it's making going up, coming down, going up, coming down, going up, coming down. That's how it moves. Then it come down, go up, come down, go up. So it moves in a zigzag form like this most of the time. If it's going up, this side will be going up. It will not just go up once like this. It doesn't do like this. If you do like this, then it's not a market you want to trade. That's not a healthy market. If you open any chart and you see it just showing one candle, green candle, up, 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 no any red candle inside, just know that that is not a good market. You don't want to trade that kind of market. Okay? You don't want to trade that kind of market because the time that it just come down, the same way it went up, that's the same way to go down. You just see it go down once and you cannot know when it's going to start. You understand? So that's not a good market. And if you are to look at psychologically, anything that has good must have some element of bad. Nothing can be 100%. So if market is just going in one direction, it's not still good. You have to at least see the opposite direction, small inside it. So that is why this is a LD market action, price action that any asset should be doing. Go up, come down a bit, go up, come down a bit, go up. It's only in Nigeria that something goes up and never come down. But that's why Nigeria is not normal. But every normal market, when it goes up, it comes down a bit before it goes up again. Then it comes down a bit before it can't just be going up, 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 up. And on the flip side of it, when something is going down, when price of anything is going down, it's not supposed to just go down straight once like that. If it goes down straight once, then that's not LD. It's supposed to go down, come up a bit, go down, come up a bit, go down, come up a bit. So this side is supposed to work. This is a LD price action. If you check, if you open any chart, put it on line chart, this is what you are going to be seeing. You will not just see that it's just going one direction. Or else if it's just going sideways like this, that's why you will not see that. But if it is going up or going down, that's what you'll be seeing. Any chart that you open, that's what you see. So this is what we call market structure. Now there's a way we label it for ease of recognition, so that for ease of identification, so that we can just easily identify it. We give it a name. So let's see price start from here. Let's say we start this price action started from here, and this is a low price. We call this place a low price because it's actually low. And let's say we now call this high. So these are the 2 points that the price actually first started from, right? It started from this lower price and went up to this high price. Start from this low price, move to this high price. Then it dropped down to this point that we can simply label, higher low. This higher low. Then we have another high that we can call higher high. All these are just names. It doesn't really, it's not really a big deal like that, but it makes it easier in terms of identifying needs. So we have higher high. And it continues like that. We have price starting from this spot. We have low, we have high, we have higher low, higher high, higher low, higher high, higher low, higher high. That's how price keep moving, creating higher high, higher low, higher high. So when you see series of higher highs, higher lows like that, know that the price is uptrending. Series of higher highs, higher lows. Series of higher highs, higher lows means that what? Price is uptrend. Okay. Then on the flip side of it, for sell, let's say we have prices to be at this higher price. I'm trying to copy this. Just hold on. Let me just retype it. We have high here because this is high price. The price drop from there and give us a low. Give us this low. Okay. Then it push up again and give us what we call lower high. Give us lower high, then a lower low. So when we start seeing lower high, lower low, lower high, lower low, lower high, lower low, then you have a downtrend. Do you get it? This is how to recognize the trend. You have low, high, higher low, higher high, higher low. So so when you have it like that, you simply have recognized the trend. So if you look at this trend we have here, you can easily use the same method and label what we have here as low. Right. Then here as high. Right. So we have a higher low. Okay. Let me put off these moving averages. Higher low. Sorry, higher high. This one is higher. Then higher low, then higher high, like that. Okay. So trend began to, so that's how it goes. It continue making higher high, higher low. So when you have trend going that way, then you have uptrend. Then opposite of it is downtrend, where you have higher low, higher, lower high, lower low, lower high. So example of that, we can see from here, even from here, we can see that price switch temporarily to price switch here already to a downtrend because we have high here. We have high here. Then we have low here. Then we have a lower high right here. a lower high right here, and a lower low right here. So basically, that's market structure for us. Okay. Now you will notice something, that price cannot just keep going on one side forever. At some point, we still have to switch. So from this place now, this November 2024, we've been having higher high, higher low, higher high, higher low, higher high, higher low, higher high. But after this point, now we did not create a new higher high. Instead, we created a low. Do you understand? Instead, what we created a low. Then from here, we started having a trend change. We started having what? A trend change. Immediately, instead of having higher high, we started having what? A lower low. This is supposed to be lower low. Immediately, we start having lower low. Then we are expecting a what? A trend change. Some people call it shift in market structure.
Okay.
Shift in market structure. That's what some people call it, SMS. That's what some people call it. Some people call it SMS. Now, that's one. Then another thing we used to have is anytime price break below the most recent higher low. Anytime the price breaks below the most recent higher low, then we call it change of market structure.
Wait. Anytime what?
Anytime you have price going on an uptrend, we are having higher high, higher low, higher high, higher low, higher high, higher low. Then price turn around and broke below this higher low. When price broke below this higher low, we call it change of character.
Okay.
Change of character. Change of character. Or you can just short it as chop. So these two stuff, when they happen, both of them tells you that price is switching to the other side. Price is what is switching to the other side. If price was going up before, and you see this SMS, or you see change of character, it tells you that it's switching to bearish. Now, if you go to where there is bearish market, let's look for where we have bearish market. Okay, so for a downtrend, this is an example of a downtrend now. Right from around here, price started downtrending like that. Then it keep going down, creating what? Low, high, low, lower high, lower low, lower high, lower low, lower high, lower low. You understand? Then all of a sudden the lower high was broken. Then we have a change of character. Let me type it out. We have high. We have high. We have low. We have lower high. Then we have lower low here. Then it continues like that, lower high again. Then until this low is broken before we have a new lower low. So we have a new lower low here. This being our lower high. Then we have lower low here. Or I can even say, no, this one is, I can see here also. Then we have lower high here. It's switch. We did as if it switch bullish here, but it's a fake one. Then creating another lower high. Now, price just keep ranging, going up and down in the same direction. They finally broke this lower high. So when the lower high got broken, we have what we call this change of character. So if it is downtrend, when lower high is broken, we have change of character. When it is uptrend, this higher low that will be broken for it to be lower change of character. When we're on the downtrend and the price broke above lower high, then we have a change of character, showing that price is changing direction to the upside.